All right, everyone. Happy Wednesday. Happy hump day. Welcome back to the discount. Today, we want to go over a couple different commodities that we have our eyes on for the long term. And the macro view on this is basically after some type of deflationary event that is likely going to happen within the next 12 to 24 months. Hard to predict that. But the interest rate hike cycle has done a number on the economy, and we're going to be looking out for some type of deflationary event in the market similar to 2008. Now, when we get that 2008 moment, which is over here on, you're looking at the gold chart, but I'll just show you here. We get this type of deflationary event, and you're already seeing a lot of commodities down, 30 to even 70+%. So we're keeping an eye out on these types of commodities like natural gas, like wheat, silver, and gold. And there's a few others, but let's keep it concentrated today. So currently, this is the gold chart. We're going to get back to this in a minute, and again, going to provide you my thoughts on this. But first, let's go into a heavily discounted asset in our view, and that is natural gas. Natural gas has just been absolutely hammered from high to low here. It is already down 78% or so. And I want to show you here on the monthly chart, okay? What a great bottoming tail that this chart put in, and it is currently holding this. So we want to take a look at this, obviously careful with position sizing on these discount asset plays because they can go lower, right? You have this bottom right here at about $1.50. You want to be careful, right? These things can still flush and still reach even new lows. However, when we start to see buying and accumulation institutionally show up on the chart like this is when it starts to get my attention. Obviously, this huge sell-off just absolutely capitulated investors and traders out there. And now we're starting to look at accumulation mode. Now, the target for the upside for natural gas, and just in my opinion, in our opinion, in the near term, is this gigantic futures gap left open between about 4.4 and $4. So you want to keep that on your radar as an upside target for natural gas. If this is going to be the bottom right here, if you're a shorter term trader, I have said this, you can use this monthly candle low right here as a stopping point, either on a automatic stop, or perhaps some traders like to use candle close stop. So if this closes weekly or monthly or even daily below this low right here at about 2.1, you want to go ahead and close out of that position. Me personally, I'm looking at this as a multi-year opportunity to buy this type of asset. Next up, we have wheat. Wheat is an interesting one. It came in and just tagged this level beautifully and made a really nice weekly bottoming candle here. If you wanted to, you could stop out below this bottoming candle low, and this thing could get all the way back up to at least this last area of support. If this is going to be a long-term bottom, I think this could easily get back up to that $9 level up here. Keep your ears and eyes to the ground on this one. If this is going to continue its uptrend, again, this could be a significant bottom on wheat. Okay, next up is palladium. Palladium is an interesting one. I think it has more downside to go. However, we were already into a pretty significant pivot point right here, and I can see it coming down, potentially getting down to this level right here. And if we draw one more line of defense, I could see that 846 level getting tagged. Now, back in 2008, when we had that deflationary event, this thing ran over 400%. And you could see if you get some type of good average into these levels, they should be significant support opportunities. We could see another 5x situation over the next few years. All right, now we go over to the all-important gold. So I want to relate this time period right here that we're in right now to a time period before 2008. We're currently at this pretty big pivot area here, and this trend line that seems to be respecting the resistance. Now, take a snapshot of this and let's go over to the 2008 period and let's zoom out a little bit here. So, we could be in this situation here where it's respecting resistance for the time being. However, it is going to melt up. Now that the interest rates have stopped, gold could be on a rip-roar rally before a deflationary event, which brings it back down to the mean. Typically, in these events, gold corrects about 30%. So if we take a look at where we are now and the possible scenarios here, gold is going to take off from here. It's going to build energy for another push higher around that all-important $2,500 level that analysts and everyone is talking about. That would bring us in a deflationary event back to the mean right here in this trend line in this area at about 1700. So that's scenario number one. Scenario number two, we have a very important level, coincides with this trend line all the way back from the 2006 all the way to 2008, once again tagged in 2015. Again in 2016, so on and so forth. We're going to see a correction in gold right now, and we are already in the deflationary environment, and we're going to see a correction in the indices and everything else. That 30% mark brings us to a pretty important level at about 1500 and gets us into that trend line again. So we're going to be looking out for both scenarios and both opportunities to be buyers of gold once again. All right, moving over to the all-important silver, the silver surfer. This downtrend is interesting to us. It broke out of it, and now it's eating time off the clock above it. You can easily see this making another low right here. However, very strong on silver, this uptrend right here. I think the lows are probably in on silver from this October low in 2022. And this is going to be a very interesting area for silver. We're going to probably be buyers down here. We were already buyers in this area. However, for a second term buy, I think that this is a definitely interesting area right here. And you could see it break out to the upside if it consolidates again and breaks above that level. So that's it on silver. Pretty straightforward. Look, the end of the day, there's going to be massive buying opportunities. There already are some massive buying opportunities in our view for the very long term. The reality is, if we get some type of deflationary event, the Fed is going to have to come in to save the day once again. And this time, it is going to be the most massive saving of all days. They're going to have to print more money than they have ever printed before. And this, in return, is going to lead to higher highs in almost all commodities. All right, last but not least, if you want to keep up with some of the charts that we're posting every single day, some of the investing ideas, swing trading, day trading ideas, and breaking financial news, come on over to our Telegram channel, the Discount channel. The link to the channel is in the description of this video. I will also post it in the comments. And also, don't forget to subscribe on our website. It's completely free. We have a weekly Sunday macro newsletter that goes out every Sunday night. It's about a 5-minute read, very simple and straightforward. Last Sunday, we talked about commodities and what it means for the global economy. So head on over, subscribe over there. We will also keep you posted via email on the discount portfolio, which again will cover discount assets, premium assets, and momentum assets. I hope you enjoyed this video. Have a great rest of your week, and we'll see you Sunday.